Hey guys, and welcome back to another episode of Soldera Markets. We are the podcast that talk about all of the developments in the renewable energy certificate and guarantee of origin space. Today we're doing our state of the geo markets. So it's our outlook for 2025 Q2. If you missed our 2025 Q1, you can go back and check and see how our predictions stacked up. But today I'm joined here with Alan Stember. So it's nice to have you guys. Yeah, I guess should we start by looking back at Q1 and see how we kind of did with our predictions last time? How do we do?
Yeah, I think generally we hit the nail on the head. I think we got most things right except one, which we'll talk about in a bit. But in first quarter, actually, we saw even more market activity than we expected with the March 31st disclosure deadline, which affected most countries that use guarantees of origin. As a special highlight, however, I would like to point out the fact that we saw record cancellations of guarantees of origin in Norway. And this is incredibly relevant because historically Norway is very bad at using their own guarantees of origin. So we saw an increase right now of around 22 terawatt hours of more consumption in their domestic market than last year, which is a huge increase. The final numbers are still pending. We'll get to see how everything played out after they have calculated the residual energy mix and everything. But usage of guarantees of origin in Norway has gone up significantly, and I think that's major progress for the market, since historically the reason why Norway is such a major exporter is because their domestic market thinks, oh, we're green anyway, doesn't put money into this, and sells off essentially the greenness of their electricity to other countries, and now both of them think that everything's fine, while in reality the energy producers in Norway, they're selling their green electricity to someone else, not you, like the factory that's not buying it.
It's great to see that they're starting to buy, because I actually was just yesterday came back from the REC market meeting in Amsterdam, and people are starting to get very critical of Norway. Actually, like, there were sessions and seminar where people put it straight on the slides and were like, criticizing Norway for that. And somebody even was asked in the on stage that, hey, if Norway would leave the AIB, would it raise the geo prices? And he was like, yes.
A lot.
So, like, yes, people are getting critical of Norway, and I think it's rightfully so. But a very interesting counterpoint, actually. I met the director of IREC, and he said that we had a quite interesting conversation. He said that we can't blame Norwegian government for that, because Norwegian government is not responsible for reporting. Like, we should be blaming consumers. I actually want to address that, because this is such an interesting point. This brings me back to the carbon markets. In carbon markets, it was the same thing. Everybody was shifting the blame. It's not the Verra's responsibility, it's the project's responsibility, or the VVB's responsibility, or whatever other term that nobody understands. This is the law. You joined AIB, it's the law. You need to follow the rules. You need to enforce the rules. If you're not enforcing them, like, who is? Like, I'm sorry, like, I'm in the firm belief that it's Norway's government fault, not anybody else. Government's fault for not enforcing the rules they have agreed. And I will fight that opinion. Like, anybody that comes to tell me it's not government's fault and consumers' fault. No, yeah, consumers break the rules, but who's enforcing it is the question.
Yeah.
And, like, this is not the voluntary carbon market where nobody's enforcing and everybody's just chit-chatting.
Yes. Another thing that I will point out is Norway is not part of the European Union. So that makes everything very complicated, because the Renewable Energy Directive that we have in Europe, Norway hasn't even fully adopted it. Like, not RED2, definitely not RED3. So everything's a bit like weird and strange compared to other countries that have guarantees of origin. They work on, like, in some sense, like, outdated requirements at this point. So yeah, I'm very excited to see where all of these conversations go of Norway potentially joining the EU, or at least transposing like the Renewable Energy Directive to its full extent. Because right now it's in this, like, very strange borderland between being adopted fully and not being adopted at all, where everybody's just kind of closing their eyes and going like, oh, okay, it's fine, it's okay, just keep exporting, it's fine.
Yeah. Like, it doesn't make sense that you sell away your renewable power and then at the same time you claim that we have renewable power, right? It's like, you just like this is not good for the market. I'm very scared of the credibility of the market. I worked in carbon markets, and we need to get rid of these discrepancies.
So despite all of that, I mean, what's behind that driving cancellations in Norway then? Do we know?
A big part of this is like CSRD, because there are a lot of Norwegian companies or companies that have a Norwegian presence that follow the CSRD, and then they do all of the nice things that they have to disclose the energy mix, and they have to follow certain protocols, and it does seem that has moved the needle. There are also major industrial players in Norway that have announced that, yeah, okay, we're taking it seriously, we're working on it. All of this has moved demand forward significantly, and that's very positive. It seems like the market over there is moving in the right direction. I guess the only question is how long is it going to take for everything to kind of settle out and start making perfect sense.
Yeah, and I actually heard in the conference that, if I'm not mistaken, but the Iceland aluminum refineries now started buying geos. So those are all very, very good signals, and very encouraging of that, and applaud all the stakeholders involved who have done the hard work to, in these local markets to push this forward and, make sure we have a credible system across the EU.
All of this being said, we are still in a sort of oversupplied market state, I think, when it comes to guarantees of origin. There's quite a big overhang. We've seen some reports that have essentially said that the overhang didn't really increase last year significantly. We're still dealing with about the same amount of guarantees of origin circulating in addition to whatever is being produced. It hasn't gotten worse, but it also, so far, hasn't gotten significantly better. And I think the prices also reflected that across the last quarter. We did see 2024 prices go down and down and down, stabilizing at some point, and we did see 2025 prices stabilize a bit faster, and well, we basically just had a sideways kind of a couple of months. I would say pretty good market action, but at price points that aren't very inspiring.
Actually, I'd like to inject some of the learnings from the rec market here again. You mentioned the word pretty good market action. What do you mean by that?
Volumes were good. Like we did see like pretty good trading volumes.
So here's a nice question, right? So we had good volumes, we had record cancellations, but we had sideways market, which in trading term is called crab market, right? Actually, a lot of traders in the conference, like, they expressed the concern about the fact that we are having a sideways market. Nothing is happening because, traders, prefer volatility. Yeah, they take positions and they trade positions, and if the market is not moving, there's nothing to take over there. And it's clear some firms are struggling actually on that front, and some organizational changes are happening. The rumors are going on in some places. But can you explain to that, or what's your hypothesis on why we have record volumes, record cancellations, but not price movements?
So I think a lot of this comes down to the uncertainty, and that's also something that I think, can smoothly transition into uncertainty in the market of like guarantees of origin's role going forward, especially due to all of the geopolitical turmoil. So we have our own position. Obviously, energy independence also means having your own production capacity. It means having a strong base of renewable energy. It means having good storage, and it means having strong baseload, stuff like nuclear or, well, potentially a gas, depending on response speed, right? But ultimately, we need to be energy independent. This is just a priority for Europe as a geopolitical entity. But we have seen the omnibus package. So for context, European Union, I don't think has still completely accepted it. Proposal was made to essentially simplify the CSRD reporting scope of this thing that has been driving significant demand, and to reduce the scope from 50,000 companies to 10,000 companies, and to significantly simplify the kind of data points required in it. I don't think it affected renewable energy. It affected all of these like qualitative questions. But a lot of this has damper on sustainability as a theme that corporations prioritize or believe is.
I'm interested, sorry to sneak something in here, but last episode, last quarterly report for the Q1 outlook, you mentioned that eventually, if you try and model everything, it gets to the point where you're trying to model the entire world economy. And I thought that was a really profound point. But I would say that recently the world economy has been pretty volatile, and I think you can completely disregard it and isolate geos to their own little vacuum, right? So how has the recent volatility on the world financial stage impacted geos at all?
Well, I think this is one of the things that we ultimately see is that the sustainability has taken a backseat to questions of defense. I think defense has become a more major theme in a global discussion. And I think that is reflected in, to some extent, the excitement around guarantees of origin. Now, the flip side of this is that we did see record cancellations. I think we will, after all of the numbers have come in, we'll see that the adoption of guarantees of origin is at an all-time high, while at the same time, this kind of vibe of the market, you could say, is not optimistic. And because of these animal spirits essentially driving what people think things are worth, we're ultimately going to have depressed prices if people just have this vibe of, well, maybe guarantees of origin, maybe they aren't the thing, even though the numbers would suggest heavily that they are.
I asked that question actually from many people in conference as well, and this was a big discussion topic over there. People had very differentiating opinions on it, actually. It was quite interesting to see. Many said, we don't know, no idea how it's going to affect, of course, a lot of uncertainty. Some believe the bearish narrative, believe that the tariffs will start, further reducing the sustainability importance, and like all the like green stuff will be starting to be rolled back. And some believe that they'll have no impact because geos are not in the US market. It doesn't matter, and the European laws and objectives still apply, and the companies doing business in Europe still need to be compliant with EU laws. And in fact, like the Germany, I think just announced with the new government coalition that they're gonna firmly stay on path to the 2040 net zero commitments, and in fact they increased some requirements as well, which was an interesting side note. They actually are considering accepting international carbon credits for the reduction targets as well, but that's another story.
That will be very interesting.
Yes.
All right. But yeah, another thing that we gave an overview of last time when we had this call was the German elections. And as Denver already mentioned, that the German election, they went exactly as everyone predicted, ended up with a CDU, CSU, and SPD coalition. The negotiations possibly even went better than expected, in the sense of there were negotiations which ended up getting more green topics into the picture. And overall, I'd say this was even better, possibly from a sustainability perspective, than we were expecting as this kind of baseline scenario.
And I think we should mention that, obviously, for those who haven't been following politics too closely, last time we were worried about, a certain party getting into German political power, and that didn't happen, which is overall it's a good thing for the geo market. So I guess now let's look at short-term market drivers. So what do we think is going to happen in the sort of near to immediate term that's going to be impacting geos that traders should be keeping an eye on?
So one of the major things to highlight is just the fact that so far this year we have produced 47 terawatt hours less than last year in terms of renewable energy. At least 47 terawatt hours less. It's been less wind this time around, and this has it's been actually even a bit less hydro this time around, and all of this has created this picture where we're actually like quite behind on renewable energy generation than what you would otherwise expect. I think this is something people are possibly sleeping on, because again, the market overhang, like the total amount of floating supply that has been carried over year to year, is somewhere in the ballpark of 180 terawatt hours. That's it. So the lowest the overhang has ever been is around 90 terawatt hours. The highest it has been is like 180 terawatt hours. The difference is around 90 terawatt hours. That's the difference of like this overhang. I think the underproduction has actually eaten into this overhang significantly already. If this continues, who knows? Can't predict the future. But even if we don't like compensate somehow for this underproduction going forward into this year, I think this will have profound effects on supply and demand already. And I think that is a very bullish signal. Now, the second part we need to consider is hydro, since now that we're entering the time where we're getting snowmelt and we're seeing Norway's hydro really start kicking in and doing more, and what's happening with the reservoir levels. Again, they are at what you could say unusually high levels. But the total energy stored, I'm saying a number off the top of my head, and perhaps we can fact check this if I'm wrong, but I believe the total storage is less than 12 terawatt hours total. So when people talk about the effect of reservoir levels, I think they are somewhat emphasizing how much this could possibly affect market dynamics compared to what people have been sleeping on, which is like major underproduction actually across the like whole EU region right now. So I'd say actually we ended up this quarter in very positive supply and demand dynamics, and I think I'm just sad this has not really materialized in the prices yet. I think we will see some changes coming up, but again, can't predict the future with complete accuracy. I do have, looking at the numbers, a sort of bullish feeling about it. Now,
that's cool to hear. Does this apply to both 24 and 25 or only 25?
I would say it more applies to 25 because 24 is really heavily dropping off a cliff. So what you have to keep in mind is that in a couple of countries, you can't use 24 geos for 25 consumption. Yes, that reduces the amount of areas where you can realistically even use the old guarantees of origin. They have less market staying power, so if you have them for speculative reasons, like at some point they will just go to zero. That's like part of the picture, right? And ultimately, well, we are still in overproduction, so I think there will just generally be a lot more people trying to still offload their 24 geos when trying to buy them. Another thing that I would like to highlight is actually, while we have been talking about the March disclosure deadline, Germany does not have a March disclosure deadline. Their deadline is in, I believe, June. It's like a bit of time to consume 24 geos. But for the second half of the year, obviously, they will rapidly be losing value anyway, because everything will just start expiring. So that's kind of the last run out the door. I don't think the market liquidity will be significantly high, except for these regions, for example, in Estonia, where you can buy guarantees of origin which are just about to expire and then have another 6 months where you can use them. Like, you know, in those kind of arbitrage situations, I think that kind of demand will stick around. But it has limited use cases in the market.
I wasn't aware of this until you mentioned it recently. Do you want to quickly go over that little like 12 to 18 months difference with this sort of EU law? Because that's the base, isn't it? 18.
According to the Renewable Energy Directive, guarantees of origin can be traded for up to 12 months. 12 months is the limit for trading period. That's like, you can't have guarantees of origin that are tradable longer than that. But you can, however, specify in your laws, if you want, up to a 18-month period from issuance where they can be used. So that means for the last 6 months, you can't transfer them off of your account, but you can cancel them. You can use them still. Like that, there's like this sort of grace period. But what that grace period allows you is, if you are, for example, a major utility, you can buy these 24 geos and keep using them on an ongoing basis for whatever you need if the law doesn't tell you to do otherwise. And I think that's like a major point of arbitrage. I believe Italy changed their laws recently to also allow for this. That's been a kind of point of drama over there.
What do you think? Like, what's your opinion on that? Is that a good thing or is that a bad thing?
Personally, I feel guarantees of origin from one production year at minimum, what our law should say, same production year, same consumption year. So like if you are consuming in 24, you are producing in 24. If you're consuming in 25, you're producing in 25. I think that makes sense. The market already has differentiated prices and liquidity for different vintages. This wouldn't be a major step for the market. Any markets already inside of the EU already do this, but I think this should be enforced overall because it creates a very clean supply and demand break So if you have these kind of years of major overproduction, it doesn't end up kind of haunting you like some sort of ghost for the next 4 years while you try to get rid of like this huge overproduction that didn't really have like appropriate demand on the other side at the time.
Yeah, I agree. It's sad to see Italy adopted this change to sort of give you more time to hold your geos after trading. And, being an Estonian, I was already critical of other countries. I can definitely be critical of Estonia here as well. I think Estonia should change this. They should also cut it after 12 months and, even get to the German system, as you mentioned, one vintage for 1 year, or even eventually more granular, like maybe Rex to it. But I agree, like it's we should be moving towards more specific, not like less.
Yes, and I am completely okay with the 6-month holding period, whatever. Actually, it should be just whatever the disclosure deadline is, right? But you should be able to hold it for how long you need to actually report your consumption year. That's fine. But I don't think you should be able to carry over 24 production into like late 25. Does that make sense?
Yeah, you're right. Actually, I think that's a way better way to put it, actually, yes.
Yeah, it wouldn't really require a lot. The market can do it. The market's completely capable of handling this. There's no legal barrier to do this, like the Renewable Energy Directive does not limit you in doing this. There are countries that already do this. I just think we should accept this as a common practice because that already brings us just a bit closer to this granularity. And it also connects the market a bit more. Like, I don't know how we would handle liquidity if we get into this like hourly level, but liquidity is a completely reasonable, easy to handle question when we talk about like yearly production.
Yeah, so if any policymakers here listen to this, please force us to have at minimum yearly vintages for yearly production. Everybody will be happy. Nobody will be, well, maybe some will be sad, but most...
I'm sure some would be sad. Any pain like that would be very temporary, and you would be already playing a very dangerous game if you were hurt by this.
So just to wrap up the short-term supply conditions before we look at demand, we're seeing continuing renewable underproduction, and we're also looking at sort of hydro reserves in the Nordics and in Iberia that are well above seasonal averages. So in demand, what are we seeing?
Yeah, so as we've mentioned a couple of times, there was this March 31st disclosure deadline. This has now passed. What we are already seeing in the market is that there's not a lot of volume trading hands at all right now. Like, it's pretty light in that sense. Likely going to be in this sort of trading hangover phase for like at least a couple more weeks as people get like their stuff together and start figuring out the next compliance targets. As an important highlight, Germany's disclosure deadline is at another time. So that does affect the dynamics a bit, but overall, you can expect at least this month to be relatively slow when it comes to trading. The second element in this picture is, well, 2024 geos are losing value, and they're losing value fast. And as 24 vintage geos become more readily available, as solar production kicks in, as we see wind parks do their thing, as we see snow melt and hydro production, 25 geos will become more readily available as 24 geos start rapidly expiring. And because of this, you can expect that 24 geos, you are going to be in trouble if you're still holding them at this point. This is a annually recurring thing. You really shouldn't be holding on to 24 geos longer than you have to if you have any financial interests in them for selling. If you have only financial interest in terms of buying or holding or having this nice 6-month grace period, very cool. But if you are in this situation where you're still expecting to sell your 24 geos, it's kind of getting late, like they're expiring actively.
Are you addressing are there people out there who are actually in that situation, or is this kind of just like hypothetical?
Oh my God, every time. Like, I swear, well, at Soldera, we help a lot of very large customers handle their guarantees of origin. And one of the things that we chronically have seen with many customers is that you finally open up their registry account and you realize that there's like an absurd amount of expired geos from years where like guarantees of origin were worth like 6 or 7 euros, and then you're doing the math in your head and you're looking at this and going like, wow, this is a $500,000 graveyard. What am I looking at? Like, it feels so bad. you know, this is ultimately how we help in Soldera, is that we make sure everything's handled and solved. Like when you see that this isn't happening in a company and you just open up the accounts and see what's happened before, it kind of like, I don't know, it makes me sad. As a renewable energy producer, you should be getting all the money you should be getting.
Yeah, I mean, it's the key to transition after all. Let's talk about forwards then. I think that's a very interesting topic we haven't gotten there, or is there anything we're missing before that?
So, big uncertainty when it comes to forwards, obviously, and I think we see this reflected in the prices. So prices, I would say, on the forward curve are historically low right now. They're a bit over €1. The forward premium is still there. Obviously, the market is valuing 26 vintage Geos quite a lot higher than 25 like current year Geos. But since overall prices are relatively low compared to what we've seen in the last couple of years, we have seen a lot of market interest in actually locking in these prices on both sides. So the liquidity is quite high. It's just at prices that are, I wouldn't say necessarily inspiring. You know, there is a completely likely scenario where we end up getting into next year and we are at the kind of prices that we're looking at right now. They could also be significantly higher. They could also be a bit lower. I think it's a bit like asymmetric right now in the sense of how much lower can it go compared to how much higher can it go. I don't know how well this is factored into the forward prices right now. It's really a question of every person's like ultimate goals and objectives as they're managing their guarantees of origin. It really depends, right? Do you want the stability? Do you want the security of knowing what your geos are going to be worth? Do you want to risk it a bit more and like have more ongoing market exposure? That's really a personal question at the end of the day. I think the risks are a bit asymmetric right now in the sense of there's a lot of room up, but there doesn't feel like there's a lot of room down. Currently, my feeling about this, what I am seeing is that over the last quarter, and likely we're going to keep seeing this, forward deals will keep making up a very large amount of market transactions. This kind of market activity will likely keep going.
What sort of premium are we looking at right now for forwards?
Currently, off the top of my head, we're looking at, now this is very current, and obviously I have to preface every time we talk about prices, it will change tomorrow, like this is a very relative thing, the market is quite volatile. Spot prices are a bit less than 0.7 euros per megawatt hour when it comes to spot, and it's like a bit above €1 when it comes to forwards. So we are looking at over a 30% premium, 30-something percent premium. It is like a premium, definitely. But when you look at it in terms of like absolute sense, we're looking at maybe like a 30-40 cents premium per megawatt.
So what's our recommendation now?
Currently, our recommendation is still locking in some volume. Our current recommendation, our recommendation system is that we either recommend 60% or 30%. Like we don't really get too much more specific on this. And this is essentially based on our understanding of how is the market moving and how are we perceiving the risk and reward. Right now, feeling more towards this 30% than the 60%. I don't think the prices are necessarily very inspiring. But on the other hand, the stability that you can get from it to protect you from the downside is worth exploring. Obviously, can't be generalized as overall financial advice. But our position is there's a lot of room up, there's some room down, but it's very asymmetric in that sense.
Yeah, I guess it entirely depends on risk profile, right? I mean, if you're a producer who's, you know, kind of not struggling, but you might not be getting by as easily as others, your risk profile is going to be lower. So
yeah, and you have to keep in mind, the most important thing for renewable energy producers is cash flow. Like, they need to have predictability in their cash flow. They need to understand how the money is going to work out. And having forward prices locked in just allows them to do this a bit easier. So I definitely understand the interest in locking in forward prices. The liquidity is very much there. Like, you could probably lock in whatever volumes you want right now. But on the other hand, again, that inspiring. It's all I'm going to say.
Let's jump into the long-term market drivers. Obviously, these are the things that are going to make the market change the most significantly over a long period of time, but they are equally the most speculative. So yeah, let's dive in.
Yeah.
I think first is CSRD scope reduction.
Yeah, most definitely. I think this has been the biggest potential upset in the guarantees of origin market overall. It's just the fact that before it used to be very nice that, hey, you can just depend on the fact that 50,000 companies over the next couple of years, they will have to actively think about how they are disclosing their energy consumption. Where does it come from? What does it do? If the omnibus goes through, which there is, I think, a strong indication that it will. This will push back the clock and likely reduce the amount of companies that have to report this overall from 50 to 10,000. Overall, a sort of bearish element and likely what is depressing the forward prices for guarantees of origin, since it's being factored in that the estimated demand is lower than it was previously. Most likely, it's feeling like it will go through. I guess we will see next time we have a quarterly outlook at the very latest, but this will reduce the previously estimated amount of demand from some level down to some new level, which is just lower. So the supply and demand dynamics change because of this.
So the scope of companies reduces from 50,000 to 10,000, but what are the sort of scale of those companies within that scope, right? Because you don't just want to immediately assume it's a 5x reduction, right? Because companies are larger.
Yes, the requirements will stay around for the largest 10,000 companies, and these are ultimately the ones consuming a big amount of the electricity on the grid. In that sense, this is a sort of long tail situation. I do not believe we are cutting it down by 5 times. So we're likely cutting it down maybe by half of like the expected CSRD consumption, or consumption directly driven by CSRD over the next couple of years.
And just in terms of timelines, so the package has already been finalized. So anyone who wants to go and sort of estimate how much impact that will have, they can go and check that out. But it still has to go through the legislative process, which could take a few months. Although I'm reading that there are calls to make it fast-tracked, so we don't actually know exactly when it will be announced.
Yeah, there's also a vote, I believe, happening quite soon to stop the clock, as they say, for new companies getting enrolled into having to do the CSRD reporting. I don't know what the status is with this, but likely that's a really important part of the picture in the short term. But again, when we're talking about long-term drivers, currently, even the threat of CSRD scope getting reduced is having an effect on how forward prices are getting modeled. I can't tell you if this is an appropriate estimate or not. It feels like the impact has been quite major. And I guess we will see over the next couple of months if the forward prices rebound after some more clarity has been created about what exactly is going on.
I mean, I guess to take a sort of extra speculative bullish approach, the argument could be made that once they've kind of made this categorization between the large companies and the smaller companies, they then have kind of more potential to implement strategies that might be kind of bullish on the geo market towards the larger companies who can afford to kind of implement those changes without sort of negatively affecting the bulk, who I guess were the reason this kind of got scaled back in the first place, right? So, I mean, we'll see how it develops. I don't think it's an immediately super bearish thing, kind of just off the bat. We'll have to see how it goes.
The second major element that is a very interesting thing to keep track of from the sideline is hydrogen. So I don't know how much we have talked on this podcast about hydrogen and how it relates to guarantees of origin. There's such a thing as green hydrogen production, which is essentially, hey, this hydrogen has been synthesized, has been created with electricity from renewable energy sources. Now, the European Union has a sort of rule book for how these kind of claims can be made, but it's currently incredibly strict. Like, you have to have temporal and location matching, so the production device has to be relatively close to the place where you're actually creating the hydrogen. It has to be an unsupported electricity, has temporal requirements, meaning the exact hour that you're consuming the electricity. It needs to have been producing the electricity. And all of this has created a very high bar to actually get over, considering the state of the electricity market when it comes to guarantees of origin. It has created this very strict list of things that are actually quite hard to comply with. Now, there is a push to make this significantly easier, to relax these kind of requirements, which would make it significantly easier to produce green hydrogen. It would lower the compliance barrier to do so, and it would have a major potentially increase in demand for guarantees of origin, because ultimately you can have green hydrogen when it's produced from green electricity.
I mean, let's hope the hydrogen lobby can have a significant impact here, because it feels to me like not having this already just kind of undermines the purpose of geos within the Renewable Energy Directive, right? It's like you're saying that we have an instrument that allows for trackable energy consumption, and yet in one of the key use cases, which is green hydrogen, you're not allowing it to be implemented, right? So I don't understand why this isn't already a thing.
Exactly. They are allowing it to be implemented, but the bar is so high that it might as well like not be there, right?
It almost seems like they hired some wrong consultants to put those papers together, because obviously these weren't like geo market players and the people who actually deal with this stuff. It like the way it's structured and how I read it and all these requirements, it really feels like it's done by carbon market people. And these two things are not the same. They're not the same country. Whoever like wrote this and pushed this through, like it seems like they were just not energy people, you know, they were carbon people. I'm sorry if they were, but like they weren't using the systems we have in place. They were inventing new systems, and like that's very bad. Like, you know, we shouldn't be creating extremely complex systems that just attract consultants and completely destroy the use cases, because I spoke with many hydrogen players in the rec market and they said it's industry's very bad shape. Like,
saying, you know, like Europe's biggest export is regulation. I think this is one of those instances again. We are very good at putting together arcane sets of rules requiring professional consultants to just go like, well, it says this over here, you can't do that. No,
it's not even well done rules. Like it doesn't fit into the frameworks we built out in the guarantee of origin framework, which frankly is actually, I will say, pretty good framework. Of course, there's improvements we can make, and there always is, but I mean, compared to carbon markets, this is like, you know, iPhone versus like Disney's phone with the cord, you know, there's not a comparison.
I fully agree. And, you know, even if you wanted to have this like temporality element, hey, okay, in the same time frame, well, you know, the guarantee of origin, like the lowest like resolution we have right now is a month. So at least like, you know, go like, okay, for now, we'll just go month. When we get hourly geos, we'll think about it. But for now, it's a month. But then instead you have this like, no, it needs to be trackable down to the exact hour, even though we don't have a mechanism to do this. I don't know. It's your problem. Figure it out. Like, that's kind of, it's not reasonable for the state of the infrastructure to support it. It's just kind of wish casting some sort of like, I would like a system to exist that would handle this. And ultimately, like, we just don't have it.
I guess like the drive to improve that sort of infrastructure and granularity isn't going to be there unless we have all the market participants who are sort of involved and want to make that push happen. So yeah, I still think we need to onboard every sector we can.
Norway will keep being a topic, like in terms of long term. Like, will they join the EU? In that case, everything will get resolved by just them accepting the actual regulation for guarantees of origin and how they are reported. Right now, we're kind of in this like middle in between state, and it's very awkward. And my hope is that over time it'll get better. We'll see. But they are a big market player in the guarantees of origin market, and at the end of the day, you can't afford to ignore them. You have to figure out what's happening in Norway, because it does affect, especially on the supply side, it does affect what's happening.
I ask you to simplify this in like a super easy way, but could you explain to me, who's kind of relatively new to the guarantee of origin ecosystem, how you have countries like Poland and Romania who are in the EU but not in the AIB, but then you have countries like Norway who are kind of like, you know, like these third states who are somehow in the AIB. Like I can't wrap my head around it.
Yeah. So AIB, the Association of Issuing Bodies, is a sort of meta registry, which means that they connect registries between each other. So guarantees of origin from one country can move to another one. You could think about this similarly to how we have in banking, we have SWIFT. So essentially there's this system where banks communicate with each other, and then, you know, you can do from one bank to another bank to somebody's account. This is the kind of role that the AIB fills. They make sure, like in this example, right, that the banks can communicate and that there's like this single source of truth that both banks can agree. Yes, money has been sent out. Yes, money has been received. All of this is, we're on the same opinion on this whole process. Everything's fine. Now, AIB comes with requirements. It requires that you have implemented the sort of Renewable Energy Directive standards, and Norway has exactly up to that point. Now, why isn't Poland inside the AIB is a much better question, and that is actually purely technical. They could join anytime they wanted to. They just don't have the technical capability to get everything connected. They can't integrate with Swift. Like, that's ultimately the problem here. So they are very challenged in actually getting everything connected exactly to the point where it meets the technical barriers or requirements that they could get in, while Norway is complying up to the point and they have the technical integration, so they get to be inside the AIB.
I didn't know that. That's very interesting to know. If Norway will switch to Grexel, will they just like suddenly have everything they need?
You mean Poland? Yes.
Yeah, sorry, Poland.
Yeah, they would. But, well, as we, I think, have discussed before, Poland's, like, guarantees of origin system is one of the most, like, arcane, strange places in the renewable energy market right now. I mean, there's one company that manages the registry. There's another company you need to report the numbers to. You can't do it electronically. It needs to be a physical document. There's a lot of, like, very strange things happening there. I'm sure they're moving in the right direction because they have declared that they want to join the AIB, and I think in the background there are developments for joining the AIB, but Poland, just like every country, will move at the speed of government, and that means we really don't have a deadline for this. Like, it will happen when it happens.
By the way, if anybody listening knows any more information about this or is like an expert on the topic, please get in touch with us because we definitely want to dive into that. It's super interesting.
Yeah, talk to us about Polish geo.
I actually talked with many producers in Poland, and they said they are just currently stacking the geos on their account and struggling to sell them away. So Poland has serious liquidity issues currently.
They're trading at a discount to like AIB connected guarantees of origin as well. So it's actually like costing the renewable energy producers of Poland that they're just not able to like get the AIB connected. So I think from a government perspective, this is kind of like failing the, goals of what is the registry supposed to do for you.
Yeah, but interestingly enough, there is some sort of possibility to use Polish geos in some other AIB countries. I don't know how exactly it works, but the fact is that the prices are very closely correlated, only with discount.
Yeah, it's called an X-domain cancellation. That's actually how everything used to work before the AIB existed. I think the financial equivalent would be something like I write it down in my book that you received money, and like the other country goes like, oh, okay, I guess you received money, sure, but there isn't like the SWIFT in between. It's just somebody sending an envelope of like, I don't know, ask me later for the money, but just make sure that they, have it marked down.
Like promissory notes, is that what it was called? Like in
yeah, it kind of feels like a promissory note. Yes, it's full on like, exactly this like correspondence banking kind of like arcane shit, like in the middle. Like this is the kind of thing that used to be very normal in the renewable energy market and is actually normal in, for example, biogas market. Still, X-domain cancellations were just in one country. They write it down in their own ledger of, oh, I cancelled it for you, but you're not in this country. This other country's registry now needs to come look at my registry and go like, oh, okay, I see that. I will write it also down in my registry. And it's the sort of like, it's the medieval version of AIB. That's essentially what this is.
That's how the biomethane and biogas still works, right?
Yes, in many places, between many registries, because they don't have the same kind of like AIB nice infrastructure between everything. In many places, that's exactly how this works. Like two registries essentially have to agree with each other. It's like banking before SWIFT, exact same logic. Like, we need to have, like, this bilateral agreement that, okay, what's the procedure here?
EU plus AIB. It's very good invention.
It's pretty nice.
All right. We've got a few more. Well, the second half of long-term market drivers, we've divided into structural demand growth, which I'm really curious how you've done this division, but it'd be great if you could shed some light on that.
Yeah. I guess there's like regulatory developments, which is just how are the laws going to move. And the second part of it is what are we seeing companies do? Like, where are companies moving? How does everything work out? And part of this is that there's more interest in voluntary using geos, even though you're not forced to. Like, there actually has been voluntary growth in using guarantees of origin. There has been, like, voluntary traction on it, as Denver mentioned before. In Iceland, they are using more geos than they did before. There is continuing adoption, and we have seen this in the past quarter, and there's no reason for us to expect that this will not continue into the future. There's also this element of, like, just countries doing stuff on their own. One of these things is that the energy intensive industries, they can get discounts for consuming renewable energy. And we are seeing new kind of demand sources pop up on that end as well. There are multiple countries where you can see if you consume carbon-free electricity, we will give you a discount essentially on your levies. Like you have to pay us less if you're using green electricity, and that's just kind of an indirect subsidy for buying guarantees of origin ultimately. So that is just a new kind of demand source. We do see this with many kind of labels as well, but these are like government initiatives. Finally, and most importantly, the market still continues being in contango. The belief continues being that the market will be better next year than it is this year. And it does feel like that is the truth. The market state right now, again, also not very inspiring, but we have a lot of things going for us. The supply and demand is actually looking pretty good. Demand keeps growing, relatively stable. We're even producing less than last year so far. Overall, everything looks pretty good, but make sure and just wait for the market to catch up.
Nice. Well, we've come to the end of our quarterly outlook wrap up, so that's great. We should do another one of these in Q3, obviously. So
Yes.
I want to keep an eye out for that. But yeah, it was really great to do this. Thanks, Al and Stenva. Any final words?
Thanks, Al, for the great overview and lots of work that you and the team have put into it, and truly appreciate the effort and a lot of insights. And hope for this was interesting for viewers as well. And I'm glad to see people becoming like in the geo markets. You can definitely see the vibe and shift changing, where people are starting to demand more unification, clarity, and things starting to basically be more fair and equal everywhere. So those are very, very good things.
Nice.
Yeah, and
All right.
yeah, thanks for having me. I hope everybody learned something. I sure feel like I did. It was very nice talking through all of this. Looking forward to doing this in the next quarter as well. Yeah, but echoing Stenra's words, there's clearly a trend of things getting better in terms of expectations, in terms of regulations, in terms of like what we actually expect this market to do for us. And I don't think there's like really a reason to expect that the market will start expecting less suddenly from it. So overall, quite positive.
I'll just as a final word mention that, yeah, about Soldera, like if anybody's looking for pure a guarantee of origin automation, cancellation, issuance, sales, everything in a single bundle package, whether it's a producer, trader, or doesn't matter, we offer the platform for guarantees of origin management. And it's also free to use. So that's also always very positive. So all the software parts are free. We only take fees from market activities.
Nice. Link in description, and catch you in the next one.
Perfect.
All right.
Thank you so much.